Hey everyone, welcome back to the channel. So in this video, I'm going to bring you an update on Bank OZK and their quarterly results for the fourth quarter that they just recently posted. Now, I haven't had a chance to look at this stock in a while, but I'm guessing that the earnings report was pretty good because the stock price has been going straight up for the past few months. If you just take a look at where the stock was back in September, under $20, and now we're almost at $40. So stock has basically been a double in just 3 or 4 months. A very good performance. Again, part of this is just because the whole market's been up during that time. Part of this is because interest rates have been slowly rising, which helps financials. And then part of this is because of the good earnings results that OZK had. So in this video, I'm going to take you through those and share my insights on what I liked about the quarter and if there's anything that is a cause for concern. So here's the PDF for management comments for the fourth quarter and full year 2020. I'll have a link to this down in the description. You can also find it on the company's investor relations page. So if we can take a look down here, for the summary, they had outstanding financial results. They had $120 million of net income, which was up almost 20% from the fourth quarter of 2019. And is their second best quarterly net income ever, right? So this is a company that is consistently increasing income pretty much every year. And so no surprise here that income just keeps increasing even with the tough year in 2020. And they also set another record in this quarter with their net interest income being $237 million. We'll get to why this is a big deal later in this video, but this is a very good sign and could be a sign of things to come for bank stocks. In addition, they also had strong origination volume for their real estate specialty group, which is their main focus in lending and commercial real estate. So it seems like loan activity is starting to pick back up in the commercial real estate space. Again, excellent asset quality, strong deposit growth, robust capital, excellent efficiency. Nothing new there. That is the norm for this company and it has been for the past 40 years. So they specifically have a section on net interest income and they say this is their largest category of revenue. It's affected by many factors like the mix of earnings, assets, and liabilities, the net interest margin, and the spread. And again, I made a video talking about this a few weeks ago, how the interest rates have slowly been creeping up. And this is helping financial stocks and banks. That's why I'm so bullish on this company, because I think even with interest rates as they are, the company's undervalued. But if we do see interest rates continue to rise, their interest income is going to go through the roof as they are able to get more from the spread between what the interest rate is and what they can lend out at. And so if you take a look at their net interest income, $238 million, this is the highest quarter for net interest income they've had going back all the way to the end of 2018. And if you remember, in 2018 was when the Fed dropped the rates back down to zero. So again, this is a good sign that things are starting to go in the right direction in terms of interest rates and then the interest income for the bank. So taking a look at the commercial real estate loans from 2019, they added around 5.7 billion in loans. Around 3.5 billion of those are paid back, and so they have a nice increase year over year for real estate loans. Even though this was a tough year for commercial real estate, this company is still finding a way to increase their loan volume, in my opinion, without affecting the quality of these loans, which is probably the most important thing. And management had a little comment on this. Construction delays resulting from the pandemic had an impact on the volume and timing of the real estate specialty group loan payments in 2020. And at this time, construction and development activity has returned to essentially normal levels on the projects that specialty group is financing. So this is really all you need to know. Conditions are pretty much back to normal. And obviously, recent disruptions in financial markets were another factor affecting the volume and timing of these loan repayments in 2020. And with news of the pandemic, some of the competing lenders to this bank that would provide higher leverage and lower rates pulled back from the market, which is what I would say would happen. Because when times are good, when money is easy, you have all these lenders giving out cheap rates, high leverage, where Bank OZK is more conservative. So what that means is when times are good, this company is not going to be able to make as many loans. But when times get tough, when lenders pull back because they can't afford to make these risky loans anymore, OZK is still going to be there. And that's why they're probably the #1 commercial real estate lender in the United States. And this allows them to maintain good yielding, high quality, low leverage loans for additional months or quarters, allowing us to earn additional interest income. Now here's a chart of the non-performing assets of Bank OZK versus the average of banks in this group. And even though there has been a slight uptick in non-performing loans from Bank OZK, as there have in pretty much every other bank, this chart just shows they've been consistently higher quality loans than the average. So the red line is Bank OZK's non-performing assets rate, and then the blue line is the FDIC industry data. And so even though there has been a slight uptick over the past half year or so, which is something to definitely keep an eye on, I still feel pretty confident that they're going to be able to keep these loans under control. Now here's a bubble chart of the company's commercial real estate loans. Again, the one risky loan they have over here where it's unclear what's going to go on with that loan. That's the one bad loan that tanked the stock back in 2018. But if you take a look at the vast majority of their loans, that the majority of them are under 60% loan to value, so very conservatively written loans, and that is one of the strengths of this business. And now we can take a look at some of the full year metrics. So book value per share, $33, an increase again from the prior year, 2019. And then we can take a look at tangible book value, again also increasing now at $27.81 per share. So pretty incredible when you go through a year like 2020 and the company can still increase tangible book value per share. As I've said in the past, with a bank this quality, it's going to trade at a premium to tangible book value, which it definitely is now, but it wasn't earlier in the year. You know, when I picked up this bank in the low 20s, it's trading at a large discount to this. So why I'm holding on and not selling is because I think the tangible book value is going to continue to increase, and at the same time, there's going to be multiple expansion in terms of book value, which will result in the company trading at a higher valuation. So now we're going to take a look at the earnings call transcript from the Q4 results and see if there's any other insights that management can give us in terms of what they're looking at for 2021. So the first question is talking about how they obviously had a record net interest margin, and the thing is, part of that is going to be permanent. A permanent increase in the net interest margin, and part of it was just for Q4 based on some of the asset purchases that the company did. So even though it looks great this year and it should continue trending like this quarter was somewhat of an exception in terms of their interest margin. Now this is an interesting question asking about the cash position, because I didn't show this, but the amount of cash on the balance sheet of OZK is up a lot year over year from 2019. And so George Gleason, the CEO, answers this by saying, you mentioned the cash position is much higher than it was a year ago. The securities portfolio is also higher than it was. And so their liquidity position is very strong. And then he goes on to say, with interest rates this low, it doesn't really make sense to do anything with this cash at this time. Better to just hold it and wait for more opportunities to come to be able to invest that cash at a better return than whatever you're getting with the 3-month treasury note. Now, another thing they're talking about is ramping up the marine and RV group lending, which I do think has huge potential over the next few years, because in 2020, boat sales and RV sales went through the roof as people are trying to find different activities to do that. Didn't require them to be with a bunch of people. And so I think this trend could continue, and that would put OZK in a good spot to be the main lender for those types of things. Of course, the credit quality has to be there. The conditions have to be met. There have to be borrowers willing to borrow at the strict rates, at the strict conditions that OZK usually imposes. But if that is the case, I think there is a large opportunity here with the boat and RV group. And then we have another comment on the amount of cash on the balance sheet. He says, one of the reasons we've articulated to hold significant amounts of excess capital is to be ready for a situation where economic turbulence creates opportunities. And they had some of that in the past year, but they only had a very short window of time to capitalize on some of these opportunities. And so this is why I like this bank so much, right? They understand market cycles, right? They understand that these incredibly high valuations aren't going to last forever, and they want extra cash around. So whenever a downturn does come, they'll be able to take advantage of that. They won't be hanging on by a thread like a lot of other banks, unfortunately. They'll be able to take advantage and capitalize on an opportunity when it arises. So that's it for this video. Just wanted to give you an update on the Q4 results for Bank OZK and why the stock has been performing so well. Again, I'm not planning on selling anytime soon. I still think the stock is worth conservatively $45 to $50 a share, and if interest rates go up, even more than that. So it's one I'm content on holding. Again, they raised the dividend again. So very consistent dividend payments that have been increasing every quarter for the past 10 years or something like that. So very consistent on the dividends, very consistent on the quality and book value growth, and overall just a great company, which is why it is my #1 holding. So if you like this video, leave a thumbs up to help out the channel. If you're new, subscribe and hit the bell icon so you don't miss any of my new uploads. So that's it for now, and I will see you on the next video.